Most beginners enter trading thinking it is easy money, but within days they lose everything, not because the market is unfair, but because they never truly understood how trading actually works in reality. The stock market moves every second, prices rise and fall constantly, driven by human emotions like fear and greed, and if you do not understand these movements, trading quickly becomes a dangerous game instead. Investing is about patience and long-term growth, while trading focuses on short-term opportunities, where timing matters more than time itself, and this difference changes everything about how money is made or lost. Traders use charts to understand price behavior. Patterns like candlesticks help identify trends, but these patterns are not magic signals. They only show probability, and relying blindly on them often leads beginners toward consistent losses. Many beginners treat trading like a casino, chasing quick wins without strategy, but trading is not gambling. It requires discipline, patience, and understanding risk. Otherwise, losses become inevitable and accounts slowly disappear over time. A stock represents a small ownership in a company. When you buy shares, you own a part of that business, and your profit depends on how the company performs and how people value it. Prices move because of supply and demand. When more people want to buy, prices go up. When more people want to sell, prices fall. Understanding this basic rule is essential for every trader. Different time frames show different perspectives. A move that looks small on a daily chart may look huge on a 1-minute chart, and choosing the right time frame is critical for your trading strategy success. Professional traders focus more on managing risk than chasing profits. They protect their capital by limiting losses, because survival in the market is the first goal, and profits come only after consistent discipline is applied. Trading is not just technical, it is psychological. Emotions like fear and greed control most decisions, and unless you learn to control your mind, even the best strategy will fail in real market conditions. Social media makes trading look like fast, easy money, but what you rarely see are the losses, the failures, and the reality that most beginners lose before they ever learn how markets actually function. Following others without understanding is one of the biggest mistakes beginners make. Copying trades may work temporarily, but without knowledge, you will not know when to enter, exit, or manage losses effectively. Leverage can multiply your profits, but it also multiplies your losses. Beginners often misuse it without understanding risk, and a single bad trade can wipe out an entire account within seconds. A stop loss is your safety net in trading. It limits how much you can lose on a trade, and without it, small mistakes can quickly turn into devastating financial damage over time. Successful traders focus on risk to reward, risking small amounts to gain larger profits. This way, even if they lose multiple trades, a few winning trades can still keep them profitable overall. Trading with the trend increases your probability of success. Instead of fighting the market, you move with its direction, making decisions based on momentum rather than guessing reversals. Support and resistance levels are areas where price reacts repeatedly. These levels help traders identify potential entry and exit points, but they are not perfect. They only increase probability, not guarantee outcomes. Breakouts happen when price moves beyond a key level with strength. They can offer strong opportunities, but false breakouts are common, and entering without confirmation often leads to quick losses for beginners. Volume shows how much activity is behind a price move. Strong moves with high volume are more reliable, while low volume moves are weak, and understanding this helps traders avoid false signals. Many beginners overload their charts with indicators, thinking more tools mean better decisions. But simplicity is powerful, leading to clearer thinking and better trading results. The moment a trade goes against you, fear begins to take control. Even a small loss feels uncomfortable, and without discipline, this fear pushes beginners to make emotional decisions instead of logical ones. Instead of accepting a small loss, beginners often hold their position hoping price will reverse, but hope is not a strategy, and this mistake turns manageable losses into much larger and painful financial damage. On the other side, beginners exit too early, afraid of losing gains, but this fear prevents them from maximizing profits, creating a cycle where losses are big and profits are small. Greed makes traders take bigger risks after small wins, increasing position sizes without proper planning, and this overconfidence often leads to sudden losses that erase all previous gains within a very short time. After a loss, many traders try to win it back immediately. This is called revenge trading, and it usually leads to even bigger losses because decisions are driven by emotion instead of logic or strategy. Overtrading happens when you take too many trades without proper analysis, thinking more trades mean more profit, but in reality, it increases mistakes, stress, and slowly drains your account balance over time. Patience is one of the most valuable skills in trading. Waiting for the right opportunity often leads to better outcomes, while rushing into random trades usually results in unnecessary losses and frustration. A trading plan gives structure to your decisions, defining when to enter, when to exit, and how much to risk. Without a plan, trading becomes random and inconsistent, leading to unpredictable and poor results. Keeping a trading journal helps you learn from your mistakes. By tracking your trades, you understand what works and what does not, turning experience into knowledge that improves your future performance. At its core, trading is a battle against your own mind. Mastering emotions like fear and greed is what separates successful traders from beginners, and this mental control takes time, practice, and consistent effort. A simple beginner strategy is to follow the trend using basic tools like moving averages. Instead of predicting reversals, you align with the market direction, making decisions easier and more consistent over time. Instead of chasing price, wait for pullbacks within a trend. This allows you to enter at better levels with lower risk, increasing your chances of success while maintaining discipline in your trading approach. Before entering a trade, wait for confirmation, such as a strong candle or reaction at key levels. This reduces uncertainty and helps you avoid entering too early without proper validation from price action. Always risk a small percentage of your account on each trade. This ensures that even a series of losses will not destroy your capital, allowing you to stay in the game longer and improve. Setting a clear profit target helps remove emotional decisions. Some traders take partial profits while letting the rest run. This balances risk and reward, building consistency over multiple trades. Losses are a normal part of trading. Even the best strategies do not win every time. Accepting small losses quickly allows you to protect your capital and stay focused on long-term consistency. Trading success is not about one trade. It is about a series of trades over time. Focusing on consistency rather than perfection helps you build a stable and realistic approach to the market. You do not need to watch charts all day. Setting specific trading times helps maintain focus and prevents overtrading, giving you a healthier balance while still allowing you to make informed decisions effectively. Before risking real money, practice on a demo account. This allows you to understand the market, test strategies, and build confidence. It's a strong foundation for real trading success. When moving to real trading, start small, focus on execution rather than profit, and gradually increase your size as you gain experience. This approach reduces risk and builds confidence step by step. Professional traders follow routines. They prepare before markets open, review key levels, and plan their trades. This structured approach reduces impulsive decisions and increases confidence during live market conditions significantly over time. Understanding market context is important. News events, economic data, and global factors can impact price movements, and being aware of these helps traders avoid unexpected volatility and make better informed decisions daily. Focus is critical in trading. Distractions lead to mistakes. Maintaining a clear mind and concentrating on your strategy helps you execute trades with precision and avoid unnecessary risks caused by lack of attention. Advanced traders train their minds to stay calm under pressure. They do not react emotionally to wins or losses. This emotional stability allows them to make rational decisions even in highly volatile market conditions. Real success in trading comes slowly. Consistent small gains over time build sustainable growth. Instead of chasing quick profits, focusing on steady improvement leads to long-term financial stability and confidence in your system. Professionals take fewer high-quality trades, while beginners often trade excessively, thinking more activity means more profit. But in reality, selective trading with patience produces far better results over time. Successful traders rely on data, not feelings. They analyze their performance, track statistics, and adjust strategies based on results, creating a systematic approach that improves over time through measurable feedback. Markets are always changing. Strategies that work in one condition may fail in another. Being adaptable allows traders to adjust their approach, maintaining performance even as market behavior evolves over time. Taking breaks is essential. Continuous trading without rest leads to fatigue and poor decisions. Stepping away helps reset your mind, allowing you to return with clarity and make better choices in the market. Confidence in trading comes from experience and consistency. As you follow your plan and see results, you begin to trust your system, building a mindset that supports long-term success and disciplined execution. Every successful trader you see today started exactly where you are now, confused, making mistakes, losing money, but what separated them was not luck. It was their decision to learn and improve consistently. Trading is a skill, not a shortcut. It takes time, effort, and discipline to master, and those who stay patient and committed eventually build the knowledge required to succeed in the long run. At some point, every trader faces a choice: to quit after losses or to continue learning, and this decision often determines whether they fail permanently or eventually achieve consistent success in trading. Success in trading does not happen overnight. It builds slowly through small improvements, consistent execution, and learning from mistakes, and over time, these small gains compound into meaningful financial progress. When done correctly, trading offers freedom, the ability to work from anywhere, control your time, and build income independently, but this freedom comes only after discipline, learning, and consistent effort are applied. But remember, trading is not guaranteed success. It carries real risks, and without proper knowledge and discipline, losses are inevitable, which is why education and preparation must always come before risking money. If you want to learn trading the right way, start by building your foundation and continue improving step by step, because success comes from consistent learning, not shortcuts or quick profit expectations. Learning becomes easier when you are surrounded by the right community, sharing knowledge, experiences, and strategies, helping each other grow faster while avoiding common mistakes that many beginners make alone. Your journey in trading starts today, not when you feel ready, but when you decide to begin. Take the first step, stay consistent, and over time, results will follow your effort and discipline.